Hi everyone, today let's talk about the CPI data, then we'll take a look at the economic and earnings calendars, then we'll look at some charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So PPI came in hot, and so did CPI, just like we expected. That's typically the way that it goes. I'm actually kind of surprised they don't revise their CPI report expectations once the PPI data comes out, as they typically go in line, and we did see that once again here. Expectations were 0.3%. We ended up getting 0.4. And then for the year, we got 3.7 versus 3.6. Core still sitting at 4.1, and core was in line with expectations. So we're seeing food and energy go a little bit higher than expected, which does make sense. In terms of hourly wages, they fell by 0.2%, but were up 0.5% from a year ago, and that's actually pretty good here. So we're finally seeing some weakening in hourly wages. In terms of CPI, we can see that on the charts. We were flat from a month ago, core ticking down pretty consistently. We expected these to come back together. That's typically how it works. We got the cross here. Eventually we came back together, dipped a little bit low too quickly. And then with energy rising, we are going back together here. The question is, are we going to overshoot and then see core dip down and come back and meet it? That would be quite bearish for markets. We're not seeing that quite yet. It's still a steady decline in core, which is good, but something to be concerned about potentially in the future. Talked about energy already, but they mentioned it was up 1.5%. Gas was up 2.1%, and fuel oil was 8.5%, food 0.2% for the third month in a row. Moving over to the economic calendar, you can see all the CPI data just like we talked about. Jobless claims continuing to be right at expectations, not ticking up quite yet. Fed balance sheet was basically flat. Interesting considering what we've been seeing in yields as well as bonds. Maybe they've slowed their selling in order to pause yields basically where they are. Could be. Looking at tomorrow, not much here. We do have some Michigan data, always interesting, but nothing that's going to move the markets dramatically. Moving over to earnings, Delta Airlines beat on the top and bottom line. Good for them. Walgreens missed on earnings. Domino's Pizza beat on the bottom line but missed on the top line. And then tomorrow here we have United Health, the big banks, Wells Fargo, JP Morgan, BlackRock, Progressive, Citibank, PNC Financial. And then Monday we have Charles Schwab, Bank of America, J&J, fairly interesting, as well as United Airlines on Tuesday. Moving over to Max Payne for tomorrow. You can see still sitting at 430. Big spike of puts at 430. I wouldn't expect to break through that level tomorrow. I expect that to hold. Total options 1.2 million. Not a bad close for the Friday. And I would expect to finish between 430 and 435, which is already where we are. Not expecting a ton of movement. Maybe we slide down to 431, certainly possible. 434, also possible. Anywhere in this zone makes sense to me. Moving over to the charts, starting off with the S&Ps, down 0.61% on the day. And you can see that here we rallied up into the pre-market, got the high inflation data, found a little bit of strength, thought we were going to be okay, just like we were yesterday. And then we got this massive bearish candle, came down to that next level, 431.71, bounced from that level. And now we're back into this range here between that 431 and trend sitting at 434.30. But this is a structural change now. We have a lower low from this previous low. And now if we rally up into this area, you would expect a lower high setup and a bigger pullback into this 428.59 area, certainly possible. Zooming in on the daily structure, overall, we were expecting a lower high. The question is, where was that going to form? I was still kind of looking for that 55 EMA at 441.15. But we ended up pulling back here, testing VWAP, testing 21 EMA. We're still in bullish momentum, but if we step down here tomorrow, I would expect that to pull back further. You got the 9 EMA sitting at 429.38, certainly possible in that area as well as the 144 sitting at 429.76. If we pulled back into that area, I would expect some buyers to come through and then finish right in that 431 area like we saw on Max Payne. So slight bearishness, but still expecting some support to come through. Moving over to the Qs on the hourly and the daily. Similar thesis, rallied up in the pre-market, broke down in the afternoon, hit my level at 367.63, rallied up to my next one at 370, and then closed right on that level. On a closing basis, you can see this is a double bottom at that highly traded zone. Watching that level quite closely, I have an alert there. I'm going to move this upper alert to just above that 370 level. But the NASDAQ still looks a little bit stronger. We don't technically have a lower low on the hourly chart. We did wick a lower level, but it couldn't hold that and still held this previous low going back to 11 October. If we rally up, maybe we could hold this structure. I do expect the NASDAQ to continue to hold up a little bit better than the SPY, but overall not terrible. Zooming in on the daily chart, this structure actually looks quite a bit cleaner to me. We have a cleared trend line on the top and bottom. We didn't quite get to that trend line, which makes me think we might still see one more wick to that upside, hit that level before we see a bigger breakdown. Momentum bullish. RSI did weaken here a little bit, but it's still above the SMA. Certainly could go a little bit higher. Once we break below the SMA, though, that's probably going to spell a little bit bigger pullback. But right now, that's not the case. Everything is still a little bit bullish, but showing some weakness on that candle after 4 solid days in a row. Moving over to the Russell and the Dow. The Russell was just an absolute dumpster fire on the day. Down more than 2%. You can see this 7 o'clock candle was down 2%, and then the 11 o'clock candle was down 0.78%. So really big dumpster fire on the day. Didn't expect it to be that bearish, especially compared to everything else. Came down to that highly traded zone, did hold that level, and I did think we would see at least a little bit of a pullback, but this was massive. It took out all these previous bullish days in one push, right back into this range here. Bearish momentum on the day, tons of volume, bearish RSI, does not look great. And if this dips below this previous consolidation, that is going to be a massive indicator to the bear side. Right now it's still holding, so you can still trade it to the bull side, but if it takes this out, super bearish. Dow, still holding in the range, tested that upper level 339, came down, tested 335.91, held that level after touching the 55 EMA. Momentum here now looks pretty weak. You would expect this to roll over tomorrow. If it takes these EMAs out as well as that 335.91 level, then you would expect a retest of this previous consolidation, whereas the Russell just did that in basically one day. Moving over to Apple and Tesla. Apple did fine on the day, up 0.5%. Touched my level at 182.37, got into this range after a slight gap up. Couldn't get to that trend line. I would expect it to wick that before we see a change of trend, but right now this is still bullish. We're above all the EMAs and SMAs now on the daily chart. Still looks clean, bullish momentum, bullish RSI. So no change here, continues to look good. Tesla, another bearish day. That's a confirmation down now in my opinion. We're at this consolidation of EMAs. We got a flip on momentum, stepping down. RSI is not below the SMA yet, but this does look weak coming off of that trend line. I would expect this to pull back a little bit further here tomorrow and probably a little bit next week as well. Moving over to the best and worst on the day, we got Broadcom performing the best at 3.55 out of the large stocks that I follow. Rallied really aggressively from 876 up to 900, right at these previous highs, potentially looking at a breakout to all-time highs. That could be interesting. Netflix down another 1.33%. Bearish momentum here now, very close to oversold conditions again. And at this point, I'm expecting this to get down to at least 348.76 before we see any kind of major support. We talked about it taking out that 200 SMA for the first time in a while on the daily chart, and that is a big bearish indicator. You can see last time that happened, we had a massive sell-off. I don't think we're going to see that same kind of movement, but it is something that you have to consider here. This is a clear lower high from the previous high, change of structure. Everything does look very weak here for Netflix going into tomorrow and probably the next week or so. Moving over to staples and discretionaries. Staples pulled back once again. It was down a little bit yesterday, but we were still at a higher low. Now we are at a double bottom right here. You can see we're just barely below my level. You could probably move this level down just a little bit, maybe to around 66. That could be interesting, but bearish momentum now, bearish RSI. If this continues to break down and establishes a lower low, that could be quite bearish. Next level for me is down at the low from this previous wick at 65.24. Added that level here today, as it looks like we're probably going to get into that range based on this price action. Of course, this could still be a double bottom, so you have to respect that. But it does look weaker here today. Moving over to discretionaries. Bearish day. Hit the 21. 21 held. The fact that it held is a little bit bullish in my opinion. If it continues to hold, that could be a good indicator for an upswing. If it breaks down from here tomorrow, you would expect to push down to 158.03. Moving over to breadth. 50 and 200 day averages. Both of them put in a very bearish candle. 50-day average did not quite take out the previous candle, so we're still setting up for a higher low. 200-day average, on the other hand, massive bearish candle, down nearly 10%. Bearish momentum. 50-day average did not see bearish momentum. We're still holding at the 9 EMA, however, this still could set up a higher low. If it does, then we could be looking for a nice little push off of that level. Got trend sitting at 37.23, and then the level I've been watching at 36.23. So interesting here at this previous consolidation. You would expect that to hold if we get into that range. 50-day average has rallied quite a bit more. You really want this 21 EMA to hold at 21.26. And this is one of my favorite setups. If we get a big rally through the 21, come down, test the 21 and hold, and then rally up from that level, that would be a nice indicator for an upswing. Moving over to yields, you can see we got a big upswing on the day. 2-year yield 1.74, 10-year yield just over 3% on the day. Not getting into uncharted territory, but this is enough to push equities down. Momentum ticking towards bullish on the 2-year. 10-year, still bearish momentum. Still could establish a lower high. That would be great. But you have to respect this here. Big engulfing green candle, just barely below the 9 EMA here. If it holds below it and then breaks down, that could be interesting. We did technically close above it on the day, but after hours here we are below it. Similarly here on the 21 EMA, you want that to hold and push lower. Moving over to the dollar on the hour and the daily. Look at these candles, absolutely massive. Daily chart up 0.81%, which is a large move for the dollar. Big swing higher above all the EMAs and SMAs on the daily chart as well as the hourly chart. Came right to that trend. The question is this a back test? If we back test and break down from here, that's going to be super bearish despite this massive price action. But if we rally through, take out these highs here on the daily chart, my next level is up around 108. That could be interesting. Momentum step down from bearish, and that makes me expect a higher high off of that move. Big impulse. And like I said, if we see some follow through here, that will be very bearish for equities. Moving over to bonds, J&K and TLT both having a dumpster fire of the day. J&K down 0.57%. Did look pretty clean on these rallies up to VWAP. VWAP held and then we broke down. Tested to 89 just for a moment and then held that level. Certainly possible this continues to hold and we see a higher low setup in a rally. Still technically bullish momentum on both of these. TLT showing the same thing. Massive jump higher yesterday. Gap down and fell here today right to this previous consolidation. Big volume at that level. Does kind of seem like someone is building a position here. You can see just how much volume is coming through at these levels. Much, much higher than we've seen for a while. And if we're building a position, that could be the indicator that gives us a very long-term rally in treasuries. Certainly possible. And this is something to watch here at these lows. Moving over to the volatility indices, move index not showing us much of anything. Barely moved on the day despite the down move in TLT, which is interesting, not really confirming that down move. You would expect a spike on that move. We didn't see it, which means maybe that move is a little bit fake. VIX, on the other hand, let's zoom in on that. You can see we got a big spike up to the 200 SMA as well as the 9 EMA, but it did reject from there and basically was unchanged on the day. Slightly bullish candle, didn't engulf the previous one. If we see a confirmation and a close above the previous candle from Wednesday, that could be quite bullish. I would expect momentum to tick towards bullish on that kind of a move. If we don't see that and we see a continuation lower, then we should expect equities to go higher. Moving over to my accounts, I did okay on the day. You can see IWM was down nearly $4, massive move lower. I rolled my options in and down to 172 for 86 cents for tomorrow. Still ended up losing a little bit over $200 on that account. You don't love to see it. IWM was a dumpster fire. Qs, on the other hand, mitigated all the losses, ended up with a slight profit, even though I played around with these options a little bit. We ended up closing right at 370-ish. And you can see I have $3.74 left. So I have about $1.74 of upside potential on these calls, but I am protected to the downside for a little bit more than $5. So not in a bad spot going into the Monday session. Let me know down in the comments section what you think of inflation. Is it going to tick higher? And is this the first signs? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.